Good morning, everyone, and welcome back to the Daily Hunt for Multibaggers. It's Monday, January 26th, 2026, and we're kicking off the week with some fascinating market commentary based on our AI-generated insights from yesterday's social media discussions.
That's right, Ethan. Our systems were buzzing, flagging a significant number of posts across a diverse set of companies. We saw a mix of highly optimistic outlooks alongside some very real financial concerns. So the overall market sentiment we're picking up today is definitely mixed, a bit risky, but also some promising pockets of potential.
All right, let's dive right in. First up, we've got USA Rare Earth Inc., USAR. Our analysis picked up some seriously bullish chatter, with users talking about gains of 350% and holding out for 2,000% returns on options. There's real excitement around a potential $1.6 billion government investment and significant site development, which are seen as massive catalysts. People are throwing out price targets in the $30 to $40 range, dreaming of moonshots.
And that's all very exciting, Ethan. But when we look at the core financial health of USAR, the picture gets a lot cloudier. Their net profit margin is at 0.0, and their earnings per share is a negative 2.23. The company is, simply put, unprofitable. And let's not ignore the price-to-book ratio of negative 46 and a return on equity of negative 36. These are pretty severe red flags, indicating negative shareholder equity and that the company is, right now, destroying shareholder value. While the news about potential government investment could drastically change these KPIs in the future, it's all based on future execution, not current performance. And our records show we've consistently rated USAR as a stay-away in the past.
A tough pill to swallow for those dreamers. So, considering both the high community optimism for future potential and the stark reality of the current financials, based on the current fundamental KPIs, our analysis for USAR remains a clear stay away. The risk simply outweighs the current financial foundation.
All right, moving on to a company with a much larger footprint, Meta Platforms, Inc., Meta. There's strong bullish sentiment here, with users calling Meta's core advertising business a cash cow that literally prints money. A lot of people are eyeing its AI ad capabilities as a huge growth driver, with expectations for the stock to hit $700 or even $900 after upcoming earnings. Plus, we're seeing an incredibly strong signal from insiders, a whopping 144% net increase in shares purchased. That's a huge vote of confidence.
Indeed, the insider buying is a powerful signal, and the KPIs for Meta do largely support the bullish view. We're seeing robust revenue growth at 0.262 and impressive net profit and operating margins, over 30% and 40% respectively. Those numbers certainly back up the cash cow claim. However, we can't ignore the ongoing skepticism around ventures like Reality Labs and Threads, as well as the legal challenges Meta faces regarding addiction claims and privacy. While the PE ratio of 29.14 might seem reasonable for a growth tech stock, these external factors and experimental divisions introduce a layer of risk that warrants close monitoring. Our previous ratings for Meta have often been a buy, reflecting its strong fundamentals and market position.
So, with those strong financials and insider confidence, despite the headwinds, what's our take?
Given the powerful fundamental KPIs and the overwhelming insider confidence, our AI-generated insight for Meta is a buy.
Okay, next up, we saw some really interesting buzz around Rain. Our social media feeds were buzzing with overwhelmingly bullish sentiment for a company named Impinj, ticker PI, talking about massive growth potential in Rain RFID technology for consumers, even smartphone integration. Users were calling it a moonshot with 20x growth potential after a big patent victory.
Well, Ethan, that's where we hit a significant snag, and it highlights why those KPIs are so critical. The detailed analysis shows that the user discussion, while incredibly enthusiastic, seems to be about Impinj, PI, a company with a market cap of $4.8 billion. However, the KPIs we have for the symbol RAIN in our system are for an entirely different entity, with a current price of $2.93 and a market cap of only $23.9 million, possibly even a crypto token. These KPIs, they show absolutely no relevance to the exciting narrative about Impinj.
So, essentially, our data for Rain doesn't match the company everyone's raving about. That's quite the disconnect.
Precisely. And based on the actual KPIs for the symbol RAIN, which include, almost nothing to suggest financial health or growth, it's a clear stay away. We can't apply the bullish sentiment for Impinj to the RAIN ticker we're evaluating with its abysmal fundamental data. Even though user optimism for Impinj is high, the data we have for Rain just doesn't support it. Our previous rating for Rain was a speculative gamble just yesterday, but with this clarification on the KPIs, it's even clearer.
All right, that's a crucial distinction. So for the record, based on the actual data tied to the rain symbol we're analyzing, our verdict is a stay away, despite the excitement surrounding the other company. Let's move on to Robinhood Markets Inc., HOOD. We saw some high-conviction YOLO posts, with users calling it undervalued and pointing to strong insider buying. There's excitement about its strategic expansion into prediction markets and sports betting, plus its strong institutional backing at 65%. It's also trading well below its 52-week high, suggesting potential upside.
You're right, Ethan. There are some compelling bullish signals. The insider buying is very strong, with a 77% net increase in shares purchased, and the company shows impressive revenue growth at 1.0, indicating a 100% year-over-year growth alongside an excellent net profit margin of over 52%. These are solid numbers. However, we also need to acknowledge the significant volatility, as indicated by a high beta of 2.447 and the extremely high debt-to-equity ratio of 188.794. While strategic expansion can fuel future growth, such a high debt level and volatility introduce substantial risk, which, could lead to more reports of losses like some users mentioned. Our previous ratings for Hood have been a bit mixed, from stay away to buy, but the latest was a buy.
So weighing the strong growth and insider confidence against the inherent risks and volatility?
Despite the high debt and volatility, the robust growth, strong profitability, and overwhelming insider confidence suggest management sees a clear path forward. Our AI-generated insight for Hood is a buy.
Okay, Brooke, let's quickly round up today's candidates for deeper analysis based on our discussions. Investigate as buy, Meta Platforms Inc., Meta. Robinhood Markets Inc., HOOD. Investigate as cautious buy? None. Investigate as speculative gamble? Rain Enhancement Technologies Holdco Inc., Rain. And that wraps up today's show. Just a friendly reminder, this podcast is for informational and entertainment purposes only. The content is generated by artificial intelligence and does not constitute financial advice.
That's right. Listeners should always conduct their own research or consult a licensed financial advisor before making any investment decisions. We are not responsible for any losses incurred. The market is a wild place, and knowledge is your best asset. Absolutely. Thanks for tuning in to the Daily Hunt for Multibaggers. We'll catch you next time.